The market took a little bit of a breather yesterday after the strong rally which we've seen over the last few weeks. Joining me to give some thoughts on the market performance is Kayode Akindele, partner at 46 Parallel. Kayode, it's great to have you on the show. First of all, let me get your thoughts. Markets falling back a little bit yesterday. It's not unexpected after the strong rally, but are you a bit worried? Do you think that we may see the market flattening out a little bit until we see another set of results from the banks?
Yes, I think the market just takes some breathing space. I think they're waiting for more results from the banks, and also because a big part of the market right now is foreign inflow, and with elections in France and what's going and local elections in the UK and stuff, and what's happening in Greece, the effects in those markets will affect flows into the country.
And absolutely, I mean, you've just mentioned that a big part of the market now is foreign flows, and that's simply because of the near collapse of the market over the last 3 years. And that's a big topic in the National Assembly right now with the ongoing probe. I want to get your thoughts on a few things that came out of proceedings yesterday. Of course, the Director General of the Securities and Exchange Commission, Famurewa, more or less spelling out some of the sins of the former council members of the Nigerian Stock Exchange. And we've also heard that the result of an external audit report on some activities suggesting that many of the rescued banks were involved in illegal trading of shares, which added actually to volumes of trades in the market at that time. And my question for you now is, those things obviously are not happening again, at least we don't think so. Would the market ever bounce back?
I think the market will bounce back. I think what really requires is kind of this self-cleansing. You need to regain confidence, especially in the domestic market. And some of the things that have been done in the last 2 to 3 years is bringing back confidence into the market. But more still needs to be done. We need to get domestic market back in,
right,
and especially the pension funds and even just retail customers come back into the market. And we need to do more stuff. And they need to start knowing. I think the key thing is the broker issue.
Right.
Until the broker issue is addressed convincingly, you're not going to get those people back into the market.
Indeed, and let's talk. One of the points that the new CEO of the stock exchange, Oscar Oyema, mentioned was the Soveriegn Wealth Fund. It has a part to play in getting this market going. He also talked about further reviews in the pension fund regulations to allow more investing in equities. We know that they've reviewed recently, but he's calling for a lot more.
I disagree with him. I think first let's deal with the fundamental issues. Sort out your broker issue. Once you sort out the broker issue, are you going to mutualize the stock exchange? Then things can come in. If the Soveriegn Wealth Fund comes into the local market, all you have is government money coming in and inflating the market. It's not it will be a tonic, but it's a short-term tonic. You haven't solved the fundamental issues. Let's solve the fundamental issues before you start asking for all these people to come in.
No, but one argument, I mean, for the pension funds, is that, you know, the way the regulations are skewed right now, you have a cap for how much you can invest in equities. Some are saying that many people are more of risk takers, and they shouldn't be regulated as such. Some people are more bullish about the outlook for equities, for instance, and the regulations actually preclude them from investing more aggressively.
I disagree with that, because if you look at the pension industry in a whole, they should be long-term investors. And long-term investors should be looking at equity,
right,
no matter what. And in a sense, I think what we have is there's a lack of capacity in some of our pension managers, in a sense, and they're looking at yield, and which is good for part of your portfolio. But too much of the portfolio is skewed towards yield, and with the fixed income market at the moment, that's paying off. But they have to start looking at long-term, because pensions 10, 15, 20-year outlook. And you have to start looking at equities in that sense. And the equity valuation right now, no one expects equities to be this valuation in 10 years' time.
No, but his point, I think that's exactly his point. His point is allow people to invest more than 50% of their allocation in equities.
But even the allocation they're allowed to invest, the pension funds are not doing up to that allocation at the moment. They have not even reached, it's not as if the pension funds are doing 50% of their allocation and reach the level, right, and they want to do more and they can't do more. They don't want to, right, at the moment.